Hello, this is Cynthia Fick, and this is the May 23rd stock market update. Well, another exciting time in the market. We've got a lot going on. We have the debt ceiling talks that are being stalled, and so that can affect the market one way or another. Will they resolve anything? Hopefully by the first week or so in June is what we're looking for. Then we have interest rates going up. All of a sudden, interest rates have started going up again. What's going on there? We have the Federal Reserve. Are they going to pause? Are they going to pivot? Are they going to raise? A lot of uncertainty there. And then we have the economy in general. It's slowing down, but is it slowing down too much or not enough? So these are all the kind of things that are coming together right now. So let's just look at a time. I'm going to break it down and look at a time in the market's history that we have been in a similar situation with the debt ceiling. Let me show you that right now. What happened in the stock market before? In 2011, we had a similar thing. It was the last time a big, debt ceiling talks were going on. They called it a crisis. In 2011, as you see, the S&P 500 dropped 17%. We had another big 2012 election, fiscal cliff, they called it, and the market was down about 7%. And then we had another debt ceiling talk and kind of crisis going on too, and the market just kind of traded a little bit down to flat, not a big deal. So you got to put this into perspective on 2011. The difference is that the stock market had been going up a lot before that. Remember, right now we're coming off the worst year for the stock and the bond market since 1871. So last year we were down 27% already, and that may kind of be built a little bit into the market. But yes, we're definitely going to see some volatility. The market does not like all this uncertainty, and this has become a big political game of chicken. So it'll be interesting to see how that comes across here. Another thing I want to break down, we've been talking about how negative it is, how only 95% of people think the market's going to be down by the end of the year, 5% think it's going to be flat, and almost nobody thinks there's any upside to the market whatsoever. Now that is considered, that's a bull bear indicator that considers, when everybody's most bearish. So there's been other times when we hit the same number of bears. 1991, we crossed that line to no bulls, everybody's a bear. And look what happened in the S&P 500. The next time we hit this line was in 2009. And no bulls, all bears, and look what happened in the market. So we've done it here again in early 2023, and historically that has been actually a good thing for the market. I've said it's a contrarian indicator. When everybody's so negative, the market actually has a chance to start going up again. So that's one aspect. Another one is what the actual market is showing us it wants to do, and this is a chart of the NASDAQ, goes back to 2000. And, many times, does this 2022, 2023 time in the markets look more like, where we fall off the edge of the cliff? Remember that happened in, 2008 and 2009. We kind of fell off the edge of the earth there. And if you look at this indicators where it actually went positive above the zero line, it happened after the low in the market was made. And same thing happened in 2016. The market started going above that momentum line after we had the low in 2016. And here we are right now. We had a low in December of 2022 in the NASDAQ. And after that, we went above the zero line. So yes, we could very definitely have pullbacks in the market, but from every angle that I watch and see, it looks like we most likely will not go back down and retest the lows. Let's look at the S&P 500. And we've talked about this a lot. This is that downtrend line we just could not break above. In 2023, we broke above it. We went down and touched it almost exactly, and then kind of, headed towards the races. We've been trading sideways for a little while, and, that will be resolved. I will not be surprised. In fact, I can almost guarantee you that during this debt ceiling crisis, we may very well go down and retest some of these moving averages again. And you know, given that the bull bear indicator that I watch and follow has gone bull, that's only happened 5 times since 2000. That the NASDAQ numbers from everything we see there look like, you know, we have crossed that momentum line going way above 0. And we've held so nicely above this downtrend line. Coming down here and touching these is not going to knock any of our long-term plans off. So might just want to prepare for something like that potentially. And then we have something that's a little fun. Look at this chart. This was done by Samuel Benner back in 1875. He was a farmer, and he tried to come across periods of time when people make money. So he chose, there were years, and there's 18, 20, 16, 18, 20, 16. So he broke it down, and it's amazing how accurate this is when you should sell and when you should buy. You're going to be seeing a lot of things like this because 2023 is on his list. And so just, you know, there's going to be a lot of people talking about it. It's interesting. You want to go back and look at the Brenner, you know, periods when to make money. And then there's something called Fibonacci charts that are also kind of aligning for 2023. If any of you have some time and want to check this out and see how it compares what the market did, I'd love to hear about it. So hope you're well, and we will talk to you next Tuesday. Have a great week. Bye.